Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, July 23rd, 2015. Thank you for joining me. I want to begin today discussing my trip last week to the San Francisco Money Show. Now, it was great that this particular money show was really focused on exchange traded funds. And I had the opportunity to do 4 workshops. One of them was a panel where I moderated and had other people, experts in the mutual fund field, folks from iShares were there, the like. A lot of ideas, a lot of discussion, and I have to tell you that there's still many people who are just learning about how to use these valuable tools, which are exchange traded funds, in their portfolio. I had a conversation with a gentleman who is in his late 70s. He's been around the financial markets for years. And he got me aside and said, "Hey, Doug, tell me really, what's the bottom line? What is an exchange traded fund?" And I just told him it's simply an index fund. It's simply a vehicle to be able to gain exposure to the area of the market that you want to have exposure to. You want to be in short-term bonds, you want to be in long-term bonds. You want to be in gold, or you want to be in oil. You want to be in small cap stocks or large cap stocks, or maybe you want to own the whole stock market. There's an exchange traded fund to be able to gain that kind of exposure. They are just tools. Now, this brings me to my second point of the day. Let's kind of talk about the financial markets. Been quite a bit of volatility of late. There's been this big sell-off in the month of July in commodity-related investments. Gold and gold mining stocks have sold off. Oil and oil mining or oil companies have sold off. Materials, they've been down. Markets go through cycles, and we are in this negative bear market cycle for commodities. But I have to tell you that pessimism is rampant today in commodities, and that's the kind of environment that you can start to get a turn out of. And I'm not saying the bottom's in as far as commodities are concerned yet, but this is an area from a contrarian point of view that you want to start paying attention to. Now, I've been talking about international investments all year long. And I have to tell you, in our newsletter portfolios, we've hit some stop losses and raised some cash. Matter of fact, I've got the highest cash levels in my income portfolio and my growth portfolio of the year this month. And we're sitting on cash positions of about 50%. So we're out there actively looking for investment opportunities. But I have to tell you, we're in this seasonally weak period of time. The summer going into September is just not a period of time where the stock market blasts off to the upside. Now, here's a couple of ideas that I want to share with you. I've talked about them before, but if you're looking for ETF ideas, on the short term, in the area of fixed income, I like these 2 actively managed ETFs, TOTL and BOND. They are both ETFs that are paying around 3 to 4% in income, don't have a lot of volatility, don't have a lot of duration risk, but something if you're an income conservative investor. My favorite country in the world remains India today, and there's about 8 different exchange traded funds that give you access to India. Now, on this week's radio show, and my radio show is now nationally syndicated in 12 markets around the country, something we're quite excited about and proud of. I'm going to be talking about the bond market and kind of what's ahead for bonds and interest rates. I'm going to be talking about this discussion that happened last week between the director of BlackRock, who owns iShares, and another famous investor on how he thinks ETFs have got some real problems. I'm going to talk about that issue. And then lastly, I'm going to discuss how much of your portfolio should you actually have in international investments. So you can click on the link included in today's weekly ETF report to be able to gain access to our radio program. That's it for me this week. Remember, you can send me an email. It's askdoug@dougfabian.com. Thanks for tuning in.